Hi, it's Steve and Joe from Fresh Agenda. And Steve, we put out our Global Dairy Directions January update last week with still pretty good global dairy market fundamentals, but the big news, of course, is coronavirus and what impact it might have.
Yeah, so in our run through today, we'll start there. And you know, we're being bombarded by, you know, the daily charts of how serious this is.
The death count, the cases count.
Fashion in masks.
Yes, new masks.
And then you know, news stories which are, you know, just blanketing the media, I guess. One thing that's you know, it is a complex thing. The timing of the end of the New Year holiday is a factor. So I think it's probably early to say we really know the full effect of this and its impact on day-to-day life. That's really hard to judge. Certainly from way back here, and we're getting lots of close-up reports showing that, you know, it's the massive gridlock effect. It's a thing to watch.
That's right. People are locked down, and obviously a lot of logistics locked down as well around food. So
in the run-up to this, the markets for commodities have been quite interesting, because we've seen this really started with the effects on oil. And you know, palm oil, we saw some dramatic falls, and then we started seeing futures move down fairly drastically. There's just a comparison of what the relative changes have been in the lead up to this week
for dairy futures,
futures, and some of the other commodities. So you can see crude and palm oil sitting there as well. So
some trepidation leading into this week's GDT event, obviously.
Huge. So the event 253 was mild by comparison, really. While that chart looks fairly horrible, we've had mixed results, and when you look at the size of the losses in the C2 contracts in GDT, a lot less than what preceded that. So taken as a positive, I mean, we still had sustained Chinese and Southeast Asian buying. Yeah,
they certainly turned up, didn't they? Yeah.
There was just a lower intensity, so that ratio of demand to the product on sale, that was the difference. The butter market stayed steady.
Yep.
The one unusual thing was the extent to which the US product got hammered on the exchange. So that's something to think about a bit.
Yeah, we've got a bit more on that later, haven't we?
Yeah, we do. The drop in futures was stunning in the lead up.
It certainly was.
Whole milk lost 380 and sort of overdid it a bit, because the result was a little bit better than that. Same with skim, and not so much a gap. We'll keep going. The train in the background won't deter us. And look at those forward profiles; they're quite interesting. We see that skim has basically retraced 3 events. Yeah. And looking very similar to what it was in event number 250.
Yep.
Butter was pretty much unchanged.
Yeah.
So we've seen that. We've seen trade pick up. We've seen good positive signs, but it's probably fragile.
Yeah.
To say the least. But,
so obviously keep watching this space.
Yeah. But we think our take is a positive result.
Yeah.
From what
under the circumstances. Yeah.
The other thing we saw come out at the same time, probably just preceded it in the US, is the product output report, which had some surprises. The strength of powder output in December, which has been after several months of that. So the powder growth has built.
Yes.
You can see those last 3 and 6 month totals there, but it really took the total combined powder to only a small increase over the full year. But everyone's watching the recent. The other things to look at out of this is that we still see butter production moving faster than demand. And cheese is still constrained.
Yeah.
Even though we've seen a slight blip and an increase in cheddar output.
So we've seen that's been a switch out of mozzarella and into a bit more cheddar.
That's right.
Yeah.
That's right. But okay, so that's an interesting dynamic.
And probably, I guess, you know, to draw that line back to the GDT results, that increase in skim and non-fat dry milk availability may be part of the factor why US skim went down.
Yeah, that's right. I think that's a good observation. And Your chart of the week, Joe.
My chart of the week, Steve. Well, this week I thought we'd go back to China and just have a look at some of the latest import data, which was interesting. December imports, a little bit of a mixed bag, Steve, but still pretty strong for powders, particularly whole milk powder.
Yeah.
In the last month, those percentage increases have kept building.
We've still got that timing issue there.
Exactly, for Chinese New Year. Yeah. So we're still seeing that in the late 2019 numbers. And also, fat gaining that traction at those lower prices. So some strength in fat imports. On the other hand, cheese been a bit patchy over the last few months, and we saw it drop year on year in December. And also infant milk formula. So those imports have just been weakening over the last part of 2019.
Still weak.
Yep. Yeah.
Okay. Well, that's a wrap from us.
From outside.
From outside, we've dealt with cars and trains and a lot of wind.
And for a change, it's not 40 degrees or 18 degrees Celsius in Melbourne. So I don't know if we'll do it again.
I'm sure we will. Okay, that's it from us. Thanks for watching. We'll be back sometime soon.